Hello and welcome to another update video about the gold chart, gold market, gold futures. This pullback is quite strong. Some people get bearish already, and that can be a good thing. However, obviously this has come down a little deeper than it would be ideal. If we look at the silver chart, I have mentioned it already in the silver update, the minimum number of, let's say corrective waves are basically in place. So at least we could get a bounce maybe tomorrow or so. Here on the gold chart, I can also see a 3-wave move down with a very much extended C wave. So I'm going to see how the market is reacting to the 2,320 level. Ideally, we get a bounce somewhere here, but pay attention to the chart. I mean, I'm looking at this as an A, B, C, right? And the B wave pullback can be a little bit deeper, no problem. B waves can be deep. It's not like a 1-2 setup. This is an A, B. And B waves can, as I said, be deep. They can sometimes go below the 78.6 fib level, no problem, whereas a wave 2 would normally not do that. It is entirely possible that this morphs into something short-term a little bit more bearish, like in the yellow count. But this would not basically be, let's say, much more bearish. Basically, the idea is that in this count, we bottomed in a 4th wave. We're looking for a rally in the 5th wave in the white count, which would complete a larger C wave and so on of a larger 3rd wave. But I'd like to see a reversal then really before we break below 2,320, at least before we get a sustained break below that level. But really, I can call that a B wave pullback in the white count as long as we only have 3 waves down, A, B, C. If it's forming another lower high and another lower low, then it's 5 waves down, then it would be the yellow count, which would indicate A wave, B wave rally, C wave down, and then we could move from there. So what would be an ideal target for the yellow C wave? Well, we can check that by taking the length of yellow wave A. We go to the top of the B wave, and then we're looking for the 100% extension as the first key level to watch, the 1.236 and the 1.38 extensions. These would be, let's say, targets based on the 100% to the 138% extensions of the A wave. Basically what it means is if we break below 2,320, it becomes increasingly likely we're going to test one of these 3 levels. And the 1-to-1 ratio level here at 2,292 is very, very close to that swing low that formed on the 3rd of May, which is quite obvious there. So it could provide some good support here. We had support on the 4th of April. We had support here. And this is the 100% extension, so it could provide some good support. Yeah, again, quite strong downside momentum, but I don't see any need to change the update or analysis at the moment. Clearly, we are in a correction. I'm watching for a bounce. I need to see some kind of a first 5-wave move to the upside. And earliest indication that we are turning around, earliest indication would be a break above the 50% Fibonacci level of that decline, 2,383. Why? The reason is that in the yellow count, this could be wave 1, wave 2, wave 3, wave 4, wave 5. And the wave 4 should not break above 2,383. Please note that this is a dynamic resistance area which will move down with the price as the price goes a little lower, but it shouldn't go any higher. So this is what we're looking for. Yeah, so really just a quick update. Not much changed here on this chart. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.